Hello and welcome to Capital Ideas TV. I'm Mark Bunting. In the early days of legal cannabis, investors have been focused on three words: production, production, production. But there's another mantra they ought to remember with the industry coming into full bloom, and that's location, location, location. There's a major opportunity in cannabis retail, and the winners will be those that put high-end storefronts in the right places. On that note, National Access Cannabis has a major head start. This is a look inside one of the company's stores. It's a polished and professional operation that's welcoming to new customers. National Access Cannabis already operates 24 stores in prime locations across Alberta and Manitoba. That store count makes the company the largest private cannabis retailer in Canada, but it's not resting on its early lead. It wants to broaden its presence across the country and capture more of the growing revenue opportunity. National Access Cannabis aims to have at least 135 storefronts up and running in the medium term. Its main focus is the Ontario market, where the bulk of the country's sales are expected to be. The company plans to open 75 locations in Ontario, while adding to its footprint in Alberta, Manitoba, as well as other provinces. Sales momentum is quickly building for National Access Cannabis. CEO Mark Goliger joined us to run through the Q2 numbers and explain the company's advantageous position in cannabis retail. Mark, there are a lot of cannabis companies that are pre-revenue or don't have a lot of revenue or earnings, but at National Access Cannabis, investors can grab onto some hard numbers. You just came out with your Q2 numbers. Revenue was way up, triple digits, adjusted EBITDA, margin solid too. So give us a sense of what the numbers were like and how you're doing it.
The revenue that we were able to post was $20 million for the first two quarters, of which $16 million was made up for the second quarter, which is a 328% jump in revenue, which is certainly exciting for our company. We're going to show great growth in our revenue going forward. In the press release that we had with our Q2 numbers coming out, we also said where we landed as far as revenue is concerned for legalization to today, and that's $27 million in revenue. So our run rate on our existing footprint of 23 stores shows us at about $65 million. And then, of course, we are looking to generate earnings from that as well. So we posted some adjusted EBITDA numbers, and our adjusted EBITDA for the quarter was $1.8 million, and for the 6 months was $2.4 million. So, we're very happy with those results, and it comes from the fact that we have a tangible footprint of operating stores, which is really important in the budding stages of this industry.
No pun intended.
None.
No. So a lot of companies are attempting cannabis retail. You're there. You are succeeding at it. So what's your key differentiator, would you say?
Yeah, so our key differentiator is that we have focused on customer experience and how we've designed our stores for today and for the future, being able to look to the future and know that edibles are going to come online. So where we put our stores, how we staff our stores, and how we run our actual operations, including what sort of inventory that we put on our shelves, is really important for our focus. Our strategy is to be in urban and suburban areas. We also have some rural stores associated with that due to the fact that certain markets require a rural expansion. For example, our RFP went into Manitoba. We could have certain stores in certain cities, if you will, but then we had to kind of branch out beyond that. So we have a different strategy depending if we are rural or suburban or urban to really capture that marketplace and, of course, that consumer. And then once we've got that consumer purchasing from our store is how, of course, we keep them and maintain the best lifetime value from that customer as we possibly can.
So cannabis has been legal in Canada recreationally, as we know, since October. What are some of the trends that you've seen in your stores?
Well, certainly the interest in high THC flower, that's been a trend, and people have been coming in looking for more THC count than, say, brands. But the next factor they'd be looking for would be certain strains. We've been trying our best to source that from the control boards, but of course there's been some problems within the industry and pulling it through from production all the way to the shelf space. And I guess the other interest would be pre-rolls. And the reason I know that so well is because in certain provinces it's been difficult to get those pre-rolls. So although we know what the trends are and are working towards them, the category management at this point becomes a little bit challenging for a retailer because we know what the customer wants, we know what we want on our shelves, but sometimes it's hard to pull it through from the control board because they don't have access to it. So where we see tremendous growth on our existing footprint of 24 operating stores in 3 provinces is when the right inventory becomes available, we should be able to materially grow our same-store sales and, of course, also focus on the gross margin of the products that would be in most demand. So we'll see revenue in the stores increase, and we'll also see our gross margins increase across our store footprint.
And Mark, how would you say that you're set up what a lot of people are calling legalization 2.0 with the availability of eventually of infused beverages and edibles and so on? You're all ready and ramped up for that?
Yeah, we're very excited for that. I think consumers are very excited for it. We know that they are because they come in asking all the time, when can we get this, when can we get that? From vape pens to drinkables to gummies and confectionery products. So what we've done is we've designed our stores so that we can fit them up with the right millwork depending on what's coming down the pike from the LPs and what will be purchased by the control boards. So we know exactly within our footprint of our stores where we will merchandise them. We're very excited to know what is coming so that we can put in the right millwork to do that, and then how we intend to merchandise them to really bring that experience to life for the customer.
And how would you characterize your relationships with pharmacies across the country?
Yeah, a great question. So we have 2 divisions. One is our recreational retail domestic, and one is our medical division. Medical, what we do here and what we're expanding internationally. We have pivoted our focus from the brick and mortar clinics that National Access Cannabis would be originally known for, and have started to focus on expanding into pharmacy by creating a relationship with pharmacists and in their business. So we've created almost like a Tim Hortons inside an Esso, where we can provide cannabis support, cannabis services for the pharmacy, the pharmacist, and of course the interested patient, and helping them support access to it through the federally legal channel as we have it today, but also growing into tomorrow as we fully believe that at some point pharmacy is going to be able to dispense cannabinoid medicines on site, whether that's maybe dried flower, certainly oils and other types of related medical products like transdermal patches, and as those things come to life. So being able to support pharmacy by providing those services and support allows us to diversify our revenue channels. And although recreational will far exceed the revenue opportunity of medical domestically, there's still going to be a lot of customers, and in this case patients, that will be looking for their medicines. And as we see benefits programs and insurance providers coming online in medical, we want to be at the forefront of that channel. And it also gives us a business model to expand internationally.
So Mark, you're in 3 provinces now, as you mentioned. You've touched on international expansion as well. So explain the growth strategy and how you're going to expand your footprint.
Sure. So let's start with recreational, because that's going to be the biggest revenue driver for our company and ultimately earnings driver. Our expansion strategy in the short term of the rest of the calendar year is to have 40 open locations across, in this case, as many of the 5 provinces that we're focused on, which would be going from west to east: British Columbia, Alberta, Saskatchewan, Manitoba, and then finally Ontario, assuming that Ontario might open up within this calendar year. And in 2020, when you look over all of those provinces and all of the applications in with provinces or probable opportunity, we should be looking at about 100 to 110 locations in 2020. And what we've been able to prove to the market as far as our ability to grow our footprint and operate stores, we know how to build, we know how to operate, so we know that we can ramp up as long as the licensing is going to catch up with our growth ambitions. We have our sights set on Australia and New Zealand. We like Germany, we like the UK. There's a lot of opportunity there. Most likely we would do it in partnership or conjunction with boots on the ground. It's not something that we feel we would organically grow and set up a team in those different countries because it becomes too hard to manage, and we don't want to have a lack of focus, even though we do want to have material expansion and the diversity of medical versus recreational, because medical, when you look at the international market over the short term, could be a $150 billion market. So having a share of that is important to us, just as it is to have, our material share here of retail domestically in Canada.
Lastly, Mark, investors have a lot of choice when they look at all the cannabis companies out there. Would you say it's safe to say that National Access Cannabis is maybe operating a bit under investors' radar? And here's your chance to tell them why they should be investing in your company.
Yeah, I think that we have unfortunately been under the radar, but we've been able to execute. So we have the biggest footprint of retail stores in all of Canada by far. Right? We have 24 operating stores in 3 provinces. I think the next best footprint might be 9 stores, right? So far in excess of anybody else. We have real revenues, we have earnings, we have a trajectory that is exponential growth, which I think is very important, and opportunities to diversify into many markets, which I think is important to investors as well. We've been very much focused on the retail side of the business, and I'm not sure that enough focus has been given to retail. A lot of it has been on cultivation. Now that there's an excess capacity coming online of cultivation, I think investors are going to be looking for what else exists within this industry, and they're going to go from the vertical nature of the upstream and start looking at the downstream. And I think what people have to understand is that at the heart of retail, it is not that different than other retail sectors. However, the growth curve for cannabis far exceeds almost any other retail environment. But the metrics are fairly similar in how they're operated and how they can be analyzed. So that's one thing. But second thing is that in cannabis, the retailer holds a lot of power because we get to choose what we pull onto our shelves. And with the amount of different licensed producers, with the amount of different brands, with the amount of, say, innovative products that they're going to come out with, we don't know as a market who's going to be the Crown Royal or the Jim Beam or the Jack Daniels. And I can keep going down the whiskey examples, but nobody knows. But what is certain is that what makes those brands successful will be the distribution side. Because if they don't have distribution, all of the marketing that they do makes it almost irrelevant because there's no possibility for the consumer to pull it through because it's not on the store shelves, which is the easiest point of access for a consumer. And a lot of people are looking for same-day purchase for same-day use. They're going to be coming into the store much more than they will be shopping online. So I think when the investment community understands that the power that retail has over the entire market, they're going to start realizing that there's value there, and certainly value in the biggest retailer in all of Canada.